Welcome to the Mind Money Spectrum podcast, where your hosts, Aaron Ogti and Trishul Patel, go beyond traditional finance questions to help you explore how to use your money to achieve the freedom you want in life.
In this episode, Aaron and Trishul discuss how much money you should invest in crypto. Similar to investing in single stocks, there are some rules of thumb to consider. Do you already save enough for retirement? Is your emergency fund adequate? Does your lifestyle depend on this money? If you're well covered, then the added risk of that Bitcoin position might be worth it to you. Even so, Trishul introduces a great analogy to the dot-com bubble in the 90s. How do you know if you're buying Amazon or pets.com? So don't forget the big picture here, as there's always an opportunity cost to consider when making any investment decision. And now, onto our conversation.
Hi, my name is Aaron Ogti. I'm a financial advisor in the Bay Area, and I'm here with Trishul Patel, a wealth manager on the East Coast.
Hey Aaron, great to be here today, and thanks everybody for listening.
Great to be here as well. So, we've mentioned this in the past that Trish and I record our episodes a few weeks in advance, maybe a month in advance. Part of it is just from our lifestyle perspective. We want to have a few episodes in the queue ready to go. And we try to be conscious of that timing. And so this is probably one of the few times that I'm willing to bet, almost independent of when we're recording and when you're listening, that crypto and Bitcoin have been in the news recently. So it happens, there's always news about this. And Trish and I wanted to talk about this. We've gotten a few questions, not as much from clients, a little bit, but from just, there's a general feeling of how much should I put into crypto? How much should I put into Bitcoin or Ethereum? And Robinhood can now trade crypto. So how much money should I put in a Robinhood account or put into Bitcoin? And they're looking for a kind of professional opinion on that. And so Trish and I wanted to kind of revisit this conversation about these speculative investments, some of the different feelings that surround them, but how to make sensible decisions around this. So Trish, I wanted to ask you first, and I'm pretty sure I can guess your answer. Do you own any Bitcoin or any other cryptocurrency?
No, not personally. Semi-full. Well, okay. So a little bit more disclosure. I have stock in a former employer who might have some, but has nothing to do with any decisions that I can make on my own.
Actually, I think doesn't Tesla own Bitcoin as well?
Yeah, a lot of companies, are private companies, have been holding shares of Bitcoin. In some cases, they've been companies that have to kind of deal with Bitcoin because either they accept payments through Bitcoin or they have some sort of reason that they actually have the actual currency or cryptocurrency. And sometimes they don't convert them to US dollar. They decide to keep them on the books. And in some cases, they actually actively go out and purchase crypto. So it's happening. And, frankly, if you own the S&P 500, there's a chance that you own some crypto by de facto.
That's kind of what I was thinking. Is your disclosure was kind of so broad that it probably applied to everyone.
That's kind of true, yeah. But, have I gone out and bought a Bitcoin? No.
Okay, so I think for today's conversation, we're not revisiting this. Should we invest in Bitcoin? I almost want to add a disclaimer of, is it really investing in Bitcoin? Like you can buy Bitcoin, but I don't know if I'm ready to think in terms of investing in Bitcoin. But should you buy Bitcoin or any other cryptocurrency? That's not the point of our conversation today. We really wanted to kind of get this idea of, if a client would like to do this, okay, they have more faith in this, or want to participate, maybe have a little bit of that FOMO. We've had past conversations about that fear of missing out. So today it's kind of like, if they already want to, how do we as their advisors provide advice on this? Because you and I have made it very clear, like, I don't own any Bitcoin directly. You don't own any Bitcoin or any other cryptocurrency directly, and I don't own any cryptocurrency. I'm not trying to hide anything there. And there's a kind of a feeling of, we don't know enough about this. It's too volatile. Is it supposed to be a store of value? But the volatility and the ups and downs make it more of a speculative investment. Like, we still don't know what it's supposed to be. And so you and I have no problem just passing on this. But it's in the news a lot. And so again, whenever you're listening, it's probably been in the news recently. And some people want to participate in this. And so if a client asks you, maybe, I guess that's my first question, has a client asked you? But if they have, I'm curious how that conversation went. If it hasn't, if a client came to you and said, I would like to invest, I would like to buy some Bitcoin, what are your thoughts? How does that conversation go?
Yeah, so it has come up, and for example, it came up in one situation where a client had some amount from a couple years ago, and you can imagine if that was timed in a serendipitous manner, it might be worth quite a bit now. And that's what happened with this client. Just out of nowhere, it turned into like a 10 or 20x. And at that point, the client's thinking, okay, now what? And
this is now my single biggest holding. What do I do now?
Yeah, and it was never meant to be anything beyond, hey, look at this neat thing. What's going on here? Let's put some acceptable amount at risk and kind of just see what happens. Kind of throwaway money, or money that you wouldn't mind going to the casino with, something like that. So it did open up a greater conversation, because at this point, like you said, it turned out to be the largest holding. And yeah, the question is, okay, what do you do from here? So I think it began first with many of the points that we've made on one of our earlier conversations with crypto, and I won't rehash that entire conversation here, but I did get up on my soapbox a little bit there, where I just mentioned my concerns about crypto and it not necessarily being a investment from the standpoint of putting your money to work so that it earns more for you in the future, but more as a store of value, like you might do with a placement in some sort of holding like diamonds or gold or something like that. And from that perspective, then we thought, okay, now what's a good amount of position to have, considering that this is now at a point where it's dominating the portfolio? And then it came to the question of, okay, how much and how long, and all those types of questions. So where we kind of landed on is, yes, it can stay around if it's one of those things where in this situation the client was able to pull out his initial investment, in which case the rest was kind of free money in air quotes. Then his takeaway was, I don't mind letting this ride, because it's essentially found money, kind of, sort of, maybe. And that part was fine. The only thing I related to the client is there a certain point where the client might think, hey, I want to start taking some off the table? What if it ends up with another 10x or another 20x? In which case, do you want to retire, or do you want to hold on to this crypto until the cows come home? So that was actually part of the conversation. And the standard conversation actually begins with the notion of, how much of your portfolio do you want to put into speculation? How much of your net worth do you think should be placed in a speculative bucket? So I think that's a good part of where the conversation started, until we got to the more nitty-gritty details.
That's actually a good point. So when I think of conversations about crypto, I'm trying to write some things down, and I think there are 4 kind of themes to people buying Bitcoin or Ethereum or any other cryptocurrency or Dogecoin, which I like as an outside observer, I just love that Dogecoin, like which is trying to be a meme of the ridiculousness, is actually doing well, and it's like it, it's it's like, do people in choosing Dogecoin understand where the meme comes from, kind of thing. My guess is a decent amount do and a decent amount don't, but that's just, I don't know if I won't go deeper on that. But the four themes I think about: one is a is Bitcoin or any other specific cryptocurrency going to become a viable currency where it is a store of value, uh, just like you can buy euros instead of dollars, or kind of the way gold kind of works as a store of value separate from US dollars. Theoretically, this can be help outpace inflation, or at least keep pace with inflation. So that's kind of one theme, is kind of viability of this as a currency. The next one is people like to some clients like to buy stocks, and they like investing in a company. They're going to buy Apple because they really like their iPhone and their AirPods. They might buy some Disney stocks, but it's like other companies that kind of they have some emotional attachment to, but they like the idea of investing in these companies. But these are good, viable companies, and that makes sense. The next one would be things along the lines of GameStop, where because Robinhood has really made it easy to buy any of these stocks, where it's almost that pure speculation, almost acknowledging it's on the short term kind of thing. Like it's this is a little bit more of the FOMO maybe, where everyone's making money on on Bitcoin. I want to get into the game. Don't have any long-term plans, but it's that almost purely emotional driven, short term. It's like I just want to have some fun. I don't want to lose anything. So this is like the closest to like that pure gambling perspective. And the last one is actually closer to what you were saying, is very similar to conversations I have with my clients about their company stock. That if they were working at a private company and the company went public, had an IPO or a direct listing, and now, well, this is not money they were depending on because they were saving in their 401k, they were doing all the other prudent things, but it did pay off. Now, it sounds like it's almost identical to that conversation that you had with your client of, okay, how much should we sell to support lifestyle, and how much is it okay to hold on to? So, given those, I'll explore that a little depth because I think there's a lot there. But given those kind of four themes that I've noticed, one, do you have anything to add, or do you want to clarify that kind of currency, buying Apple, buying GameStop, or maybe Tesla's probably somewhere in between those two, or like a company stock where they've already held those, they've already won. Now it's how much risk do we take off the table versus how much you want to keep playing the game?
Yeah, I can see all of those points making it into the conversation. I think, just the quick commentary on some of them is with currency. I get the idea that, yeah, it's good to, or it might make sense to have a currency that's not controlled by one singular government, and it's independent, and it has the ability to move in different directions, and it's not susceptible to like some central bank printing tons of money and hyperinflation and stuff like that. But one of the important themes of currencies are that you want it to be a good, like we said, a store of value. It should be dependent on having value there. And I just think that the volatility that we're seeing now with crypto is just so high that it's hard to depend on it from a stability standpoint. It just seems like it's all over the place. And I get the feeling that maybe there is some potential there with the store of value, but I think it's a little too early in the game for that to be the dominating factor on why people are buying it. In fact, I get the feeling that the strongest movements that we're seeing in this case, from these cryptocurrencies is more of the FOMO, frankly. It really reminds me of the times of, like the around the year 2000 with the dot-com bubble, where
Mm-hmm.
we had this really awesome wave of new technologies coming out, and everybody was, super glorified by all of these different things that are happening, and pretty much any company come out and put a .com behind their name, and then you'd see an IPO and a huge explosion in price, and it just seemed like free money all over the place.
That's
And
a
yeah,
good. Finish that up because finish that thought because that's a really good one.
well, it just felt like that, but there was a strong feeling during the time that, yeah, this is here, this is awesome, this is going to make a big difference, and I feel the same way about crypto, but I don't think that means it's a good time to pick, the next crypto.com stock that's going to boom. You can imagine it was very hard to make sense of it all back then, and not everybody won. There were many, many losers out there, so it wasn't an easy money once the dust settled.
That is a great analogy. I love that because I have similar thoughts on the trying to be an alternative currency. Like you said, decentralized finance. It's not subject to regulation and kind of other influences by the U.S. or any other government. That makes sense, but then the volatility doesn't line up with that. I feel like it feels like there's a logical fallacy there somewhere in there where it's not necessarily either argument is wrong, but it's kind of like it feels like it can't be both a currency and a speculative investment at the same time. Like that's kind of what it feels like. And so like when I think of it from the gold inflation currency perspective, I think there's a logical mistake somewhere there. But now that you bring up that .com analogy, I actually love that. That it's because it supports like internet is kind of blockchain kind of thing, and we don't know which cryptocurrency is Amazon and which cryptocurrency is pets.com. I don't even. I think that was the stereotypical example of a IPO that had no revenue.
That's so funny. I just typed in pets.com in my browser like a minute before you said that.
So it's like, yes, maybe Bitcoin is Amazon, but maybe Ethereum is pets.com. Like, that's a great analogy where, yes, there's probably something here, but the enthusiasm is probably way too high given how little information we can have. And so from that perspective, when people are kind of thinking about it from I want to invest, I'm willing to take the gamble on Amazon. Now, how do you think that fits in with a client situation? We don't know if it's Amazon or pets.com, but it could be Amazon.
Right. So there's a couple ways to take it. So, by the way, the backstory on pets.com is it had an IPO in like early 2000, raised like 82 million, and it just filed for bankruptcy like before the end of the year. So
IPO in bankruptcy in a calendar year.
right. But it just kind of showed you that, and any noun with a .com was just going all over the place. It was bonkers. And again, there wasn't this notion that, oh no, the internet's going to go away, and that type of pessimism. No, and it's just the notion that we don't know how this is going to shake out and who the winners are going to be. And then, like you said, Aaron, okay, now what do you do? And what if you want to try to aim for the next Amazon? What do you do then? And, so at a high level, let's step back a bit. What happened with the dot-com boom? Well, yeah, the market crashed. The NASDAQ, which represents, the technology stocks, took a big hit over that time frame. But, you look a decade or 2 decades out, dot-com companies are here, of
Mm-hmm.
course. They represent a large share of our, domestic economy, and now that growing in the global economy. The Nasdaq has since rebounded. I can do a quick, little play by play. Let's see. So
Yeah, it's internet companies are now viable revenue generating companies.
yeah, so if you look at around the year 2000, or let's start at the late 90s. The Nasdaq was around 1200. It zoomed up in less than a couple years to around 5,000, close to 5,000 at the peak. A phenomenal growth for like a 2 or 3 year period. Basically, like more than doubled, almost tripled. Then crashed below to close to back to its like 1,200 level, so lost like 70-80%. And you look at it today, it's at 15,000. So, okay, you think about it. Now, you have two options here. One, you could have tried to pick the winners within there. You could have bought at the peak even and tried to, say, okay, I found the new Amazon. I might be late to the game. The Nasdaq's at 5,000. Let me jump in on Amazon. And you could have lost 70-80%, right? And if you picked that one, pets.com, you could have lost everything. However, if you spread your bets on this new, fascinating area, maybe that's a better way to think about it. You just bet on technology. You just bought the NASDAQ index. Okay, you bought it at 5,000. You lost a good chunk, about 60-70% at its low. But if you held on to it, you would have had a 3x over the, following 20 or so years. So, 3x over 20 years, that's not horrible. Nothing to cry about. It's actually kind of okay. So, one way to kind of think about it is if you're concerned that you're timing things at the top, if you have a long enough, time horizon, maybe instead of picking the one winner in the crypto space, just betting on blockchain in general might be a way to think about it.
That's interesting. So that actually fits with some of the things I've been reading about, where like Tyrone Ross and OnRamp Invest are trying to help financial advisors understand cryptocurrency. And one of the few things I understand is that you need to be diversified. And it's also they're trying to say it is a speculative play, and so you have to be willing to lose this money. And that kind of gets back to that conversation that you had with your client who had already won some, and some of the conversations I had with clients about their company stock is anything we're leaving in the risky asset, we cannot depend on from a lifestyle perspective. That's kind of one thing I try to make clear with clients, that if we're going to hold on to the company stock, how to make sure you still get to live the lifestyle you want. And it's usually the normal things. It's saving, investing in 401k, maybe saving outside your 401k, investing in a diversified portfolio of ETFs, and focus on asset allocation, all the normal financial planning things. And I've done this math. I remember I was having a conversation with Samuel Dean. He was writing a piece for Morningstar.com. But if you have a husband and wife maxing out their 401ks, given normal assumption that 401k contribution limits go up over time, which has been pretty consistent, if they just max out their 401ks every year, which again is like this year's saving $39,000, I mean, it's still a really healthy savings amount, then I think in scale of 20 or 25 years, that with a 7 or 8% growth rate grows to $5 million. Now you get into like time value money conversations, but it's not quite the same, but it's still, that's plenty to retire on. It's like if you have like that normal working, saving, letting it grow and compound, then you'll reach those long-term financial objectives without that much difficulty. And it's okay if you have kind of all of those other things taken care of, and you have that good emergency reserve, you have a good cash flow, you know what your savings rate is relative to your income, and you have all the appropriate insurances in place, it might be okay to take on that risk. Because a good diversified portfolio isn't going to get your net worth to $10 million. Unless you just have really, really high income, high savings rate. To try and see that kind of truly life-changing wealth, you need to be willing to take on some kind of risk. And for all my clients, when it's their company stock, it's the concentration risk in itself. It doesn't actually matter which single stock it is. Some will do good, some will do bad. But the risk is from having all your eggs in one basket. You could actually, if you're at a company that you don't believe in, sell all your company stock and buy any other stock. Buy Amazon, buy Apple, buy, like I said, Disney earlier, buy Berkshire Hathaway, buy Tesla, or buy a cryptocurrency. Like it can be okay to take on that risk as long as you've taken care of all the other things first. And so when I think about crypto, I guess part of it is I don't have any of that FOMO. I don't have any of the feelings that I would enjoy putting money into Bitcoin. And so if I have any extra money, I'm going to save it in a boring way. But I can see how others, if they, again, max out their 401k, they have a good emergency reserve, they have a good savings rate, they are managing their expenses well, then yeah, I could see buying a crypto is the same as buying Apple or buying Tesla. Like from my perspective, those are just different speculative risks. Now again, because I think it's different than the GameStop thing. And so that's why I think there's GameStop we kind of knew was a weird trading issue that couldn't sustain. And I guess I have enough faith in the blockchain technology that it's closer to the .com than it is to GameStop. Where now it's still of a something will probably come out of this. It might take a decade or two and have some really big drawdowns. But it might be okay for the risk that you're buying Amazon in 1999. But if you diversify, you get both. You get Amazon and Pets.com. You see one of them fail, and the other turns you into a 10 millionaire.
Yeah, I think there's some distinctions to think about because it's something we mentioned in the last episode. There's a difference between, Bitcoin and Ethereum and, Dogecoin, which might be compared to like individual stocks versus, cryptocurrencies, which might be compared to like .com current, stocks versus blockchain, which is like a larger group, which might just be compared to technology stocks in general. And each of these has different characteristics to think about. When you're thinking about individual cryptocurrencies, then there's more idiosyncratic risk, more risk that an individual cryptocurrency could do incredibly well or it could go to zero, like the Amazon or pets.com. But when you're thinking about a basket of cryptos, then you're diversifying your risks a little bit. You're betting that crypto as a currency will continue to grow. You don't know which one. It's like betting on, .com companies as a group and just seeing, which of those will end up prospering. And you can kind of do that with, I believe there's like ETFs now that are based upon, Bitcoin. So there's ways to do that, or there soon will be. Um, I think the latest news is there were a couple proposals for Bitcoin ETFs. The SEC is currently, just mulling that over, but it seems like there will be the possibility at some point to diversify your holdings across different cryptos if there isn't already, and you'll be able to handle that, just by similar to how you purchase an exchange traded funds today on like technology stocks or .com stocks. And then there's the blockchain itself, and that's the notion that you can use this technology for currencies, but there's many other uses for it. And who knows where that's going to go? It may be even too early to say, but we've talked about how, the USPS filed patents for patenting voting using blockchain technology. There's the notion of initial coin offerings as an alternative to initial public offerings using blockchain technology. There's the notion of perhaps being able to do contracts where you have two parties that need to agree upon something, and having a blockchain will have a public ledger but still allow some anonymity. And there's even talks of municipalities offering the ability to integrate blockchain into their local commerce. So I don't know if you've heard about that, but it's basically a big regulatory push where now they're seeing. I think I saw an article saying like Miami was going to start something like that, and there may be a few other jurisdictions across the country. And
So
the
what
idea,
would these
yep.
be doing? Is this for going back to for voting, or is there something else?
No, this is to use as a currency at a municipal level. So offering pseudo banking opportunities and also barter, commerce opportunities.
Interesting. Oh man,
So, you can make these coins. For example,
yeah.
there's the Miami coin, and currently the city has made, like $7 million in this coin, and it, they may be using it for different things to support their local government, including like revenue collection, things like that.
Oh man, I feel like it's just it's gonna be there's gonna be stories. There's gonna be so many of these. There's gonna be stories of like raving successes and horrible failures. Like both of those are gonna happen to support both sides' arguments.
Yeah,
I
yeah.
feel like there's some really good uses, especially when it comes to kind of helping uh, people who wouldn't normally qualify for traditional banking services. They may be considered too risky for a bank, or they might have account balances that are low enough that a bank's going to charge them a $5 monthly service fee, and then that depletes the account. This is actually, I read a story about this. That, like, there was a small local bank, and they had one of the local elementary schools had a field trip to this bank, and they want to kind of teach them how the bank works. And so each kid brought $5, and they opened up a savings account, and they got to see, oh, here's your account balance, and I got to kind of got each kid got their own bank account with $5 in it. And then this bank was actually bought out by a larger, either national or regional bank, that didn't know about the field trip, and so they just had these small account balances, and so they charged monthly service fees that depleted the accounts. So all these kids on the field trip who put $5 in to learn about the banking system got a different lesson about how the banking system worked. But it's kind of like these things exist, and this is one of the optimisms for blockchain technology, that it could help those who would not be helped by the traditional banking system. And I can see that kind of working out. I could also see like just the massive volatility changing a lot of these local dynamics, and things going very, very wrong. That, oh, sorry, we can't do this project this year because the Miami coin dropped 90% this in the last month, which is a realistic possibility. Like the thing that can uh, quintuple in a year can also go back down. It can go from 1,200 to 5,000 and back to 1,200, like the Nasdaq was.
Right. So I think there's also, there's different coins out there that are pegged to the US dollar. So that there is an option to have that. Now, one tricky part is, are you going to get FDIC insurance for, your pseudo cash holding in crypto? I'm guessing most likely not.
So well, I guess that's kind of the point of crypto, is that you shouldn't need FDIC insurance. FDIC insurance is, I'm giving my money to the bank, they're holding it for me, but if that bank fails, because the bank is going to use those cash deposits as reserves for lending money out for car loans and mortgages. And so that's where you get the multiplier effect when it comes to monetary policy. But a cryptocurrency custodian isn't, as far as I know, isn't going to be lending that out. And so because of the blockchain technology, there is that public ledger that is verifiable on the majority of computer networks. And so you shouldn't need FDIC insurance if you're using a cryptocurrency as your kind of primary banking system, because you have that public ledger. And so the whereas where the bank can fail, because you get a run on the bank from It's a Wonderful Life, and the bank doesn't have enough money on hand to pay out the deposits of all its holders, and so that's how the bank fails, because they lent that money out in the form of a mortgage. That shouldn't happen with a cryptocurrency, but I guess maybe it's like, okay, who's the actual custodian?
Well, I think what you hit on is that, the 51% notion. And if it's a big cryptocurrency like, Bitcoin, well, that's, many, many billions of dollars. So, or many servers, that is, to control more than 51% of the computers that store the ledger, to agree on, which one is official. And that's hard to do. But if it's one of these smaller coins, with a 7 million float, or, 10 million float, it may be easier to pull something like that off. So that, that's something to keep in mind, where if you have these smaller players, and each smaller player has their own version of the blockchain code, right? And
yeah,
I've heard actually that there's two there's many colors, but the two common colors are, the ledger is determined by a 51% majority based upon the number of computers that have a copy of the ledger.
Yeah.
And then there's another one based upon the majority of 51% based upon the dollar amount controlled of the coin. They get to decide.
Oh, interesting.
So, cornering the market might be possible depending on the underlying code that represents the value, or the ledger, or the rules that define your particular coin.
Oh, that's weird. Like, I own 51% of the Miami coin, so I get to decide how much Miami coin's worth.
Well, there's concerns there on how that might flow through. And then, frankly, as we said, you can start up your own coin tomorrow, right? You can take the code, you can launch it. If you get people to buy into it, well, this opens up a big regulatory concern, because there could be a lot of speculation and frankly, just fraud. So it's something to keep in mind when you have this, for example, an initial coin offering versus an initial public offering. A coin offering doesn't have to go through all the checks and balances that you would to list your company through an IPO on, the NASDAQ or on the New York Stock Exchange. It's one of those things where, how do you know what's really going on the back end with some of these things?
Man, it goes back to like that. There's just so many unknowns. The technology, this is probably something but I feel like the risks are higher for me than any single company stock. I think that's what it is for me, where I would it feels like I would almost encourage clients to just invest in a normal company stock instead of a crypto. But either perspective, we're not depending on the money for lifestyle, so it's kind of like the one, like we'll set aside enough where if it fails, you still are not going to impact your lifestyle materially. If it succeeds, you could impact your lifestyle materially, but you are kind of enjoying the process along the way. I think that's tend to be kind of, if I had to phrase it, and I think that gets back to like all of our happiness and well-being conversations. Like, if you're enjoying it, then sure, we'll make sure you're not going to be destitute, to make sure that don't impact things long term. But it's okay to enjoy it. But if you find it stressful and anxious and like doesn't add value to your life, then I can't see it being worth it.
Yeah, that's a good point. I definitely agree with that. I think the other thing I might add is there is an opportunity cost when you're putting this to work in crypto versus some other bucket. So, like you've mentioned, I think it makes sense to have a speculative piece of your overall pie, something like 5 to 10% of your net worth could be in such speculative investments. And of that, a fraction could be towards Bitcoin. And then, yeah, think about guardrails. Think about, what happens if that Bitcoin ends up being, 15, 20, 30% of your pie. It might make sense to have guardrails on, if it grows that big, well, then trim it back to 10% and, reallocate the rest. That's just a standard rebalancing technique that might make sense overall. And then, the last thing I'd mention about that opportunity cost is kind of just going back to that example of, like the technology stocks and the dot-com bubble. I mentioned if you bought those technology stocks at the height of the dot-com bubble and watched that drop of like 60+% and then held on to it, you still would have been okay. Well, realize you could have also diversified instead of just in technology, but across the broad market. And if you had done the same thing and held till now, I just looked at a chart here, you would have ended up at the same spot. So if you just invested in the S&P at the height of the dot-com bubble and held it till now, you would have been at about the same spot. And that's just to realize when you're putting this money to work in crypto, that same money could have been put to work someplace else. And it's hard to say which one will be better, but you want to hopefully target something that can keep up with your alternative, or frankly be better than your alternative. Otherwise, why would you do it?
Yeah. Because I think I did some quick math. Like your example of 1,200 to 5,000, back down to 1,200 to 15,000, from 5,000 to 15,000. So tripling your money over 20 years was like a 5.6% rate of return. Even going from 1,200 to 15,000 was a little over a 13% annualized rate of return, which is still better than normal stocks, better than long-term average of the stock market. So I mean, that's still a good investment, but like, I think that's what I would like to see from crypto to have some confidence in a long-term viability. I don't want to think that this investment's going to double every year. I don't even want it to double every 4 or 5 years. I guess that might be about the right time frame, but it's like, I'd like something within the normal realm of returns. I want something that will average, say, 10 to 15% per year with a standard deviation of 20 to 30%. Something like that. Like that once it starts to feel normal, which is still really high volatility, but that's like emerging markets and small cap statistics. Like, those make sense within a small percentage of your portfolio. But the thing that can quadruple in a year can also go down 90%, or like pets.com, go bankrupt.
Right. Yeah. And it's one of those things where, a few things could happen. One, it has a good run, and then you pull money off the table, and then what do you do then, right? Do you put it back into another
Yeah.
crypto? And it just opens up a lot of things to think about along the way. If again you want to realize that there's an opportunity cost, and the opportunity cost I think about is with the market, you're targeting something that's going to double roughly every 10 years, meaning in 30 years you're at 8x 800% up. And if you have something that can do wildly better than that, then yeah, go for it. But if you're targeting something that is going to struggle to keep up with that 8x over 30 years for retirement money, then you might think twice a bit. That means Bitcoin going from what it's at now, I don't know, 50,000 times 8, 400,000 a coin.
That's interesting. I'm almost.
For
Is
you to
it
break even.
possible
Yeah.
to look at like the performance of FANG stocks over like the last 1, 3, 5 years versus performance of Bitcoin over the same time frame?
Yeah, I'm sure you can. See, the one thing I like to mention is, for example, these FANG stocks are now the world's largest companies, right?
Yes.
So they went from small, medium, big to gargantuan over the last 10, 20 years.
Yeah.
Now, for that same level of returns to continue for the next 20 years, they got to go from the largest companies to, I don't know, what, astronomically large
Yeah.
companies, like larger than the largest companies, to get that same level of performance. There at some point, there's friction on how large a company can get if it's already the largest out there.
Yeah. And so that's what I think. Like, I mean, that's not necessarily. Well, actually, no. Kind of like, um, we've seen a huge run up in Bitcoin. I'm wondering, like, if you invested in Amazon or Google over that same time frame, I'm guessing Bitcoin's still better. But yeah, it's like the thing that could triple over 5 years. I think Amazon roughly tripled over 5 years. Okay. So that doesn't imply that it can keep going forward at the same rate. I'd like some kind of reasonable assumption that that kind of logic would also apply to Bitcoin or any other crypto. That because it has gone up so much so fast, I would hope implies it can't go up as fast moving forward.
Yeah, so there's some understanding that the numbers I gave might even be close to inflation adjusted numbers, right? Roughly 7% a year, doubling every 10 years is a good, roughly inflation adjusted target. So, what that means is currently crypto commands a market capitalization of about $2.3 trillion. So, over 40 years, that's a 16x. So, 2.3 trillion times 16 is $30 trillion in today's money. That's how big we expect crypto to go, Trill, to keep up with market growth. Now,
What's the money supply thing? Is the M2, I think?
well, okay, global GDP right now is $93 trillion.
So okay, so for for Bitcoin to maintain its prior rate, that's a great context. It has to end up as 1/3 of global GDP.
Well, to basically keep up with stocks, yeah.
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 So I think the money supply, the M2 money supply looks like it's 20 trillion, if I read this correctly.
All right.
Yeah, about $21 trillion. So now again, like that's going to grow with inflation, and like if you're making that comparison, but that gives you an idea of Bitcoin has to become all Bitcoins would have to be worth more than all US dollars are today.
Right.
Like that's the pace that is trying to project.
Well, that's if we believe Bitcoin is going to outpace stocks over the next 40
Yes,
years.
yes.
Now, if we believe that, then yeah, crypto is a great investment. But if we have trouble,
you said 40 years?
to get a 16x, yeah.
Okay, so what do we think would be inflation? 3% per year? Is that a good?
What the numbers I gave should be inflation adjusted, because the 7% growth
Oh, I see what
in
you're saying. In stocks
is after
okay.
inflation. Yeah.
Okay, that's good. Yeah. So yeah, it's uh that's a good question. Do you think Bitcoin will be worth more than dollars, like all the Bitcoin versus all the dollars, over the next couple decades?
Yeah. And, again, if it is, then you're on par with stocks. If it's wildly more, then yeah, then you've done well. But if it doesn't keep up, then you might be better off just investing in stocks.
So yeah, so like almost like
But that's your bogey, basically. That's your target.
I'm trying to like global money supply. It says about 40 trillion, like giving a current I'm not sure I'm reading this correctly. Oh, it's probably on the scale of a quadrillion. So that'd be 1,000 trillions would be kind of total global worth. So maybe 30 trillion in Bitcoin as a kind of inflation, just like if you think it can be, what is that, 3%? Yeah, 3% of the total wealth of the world, maybe. But that'd be, so it's like, that's kind of what you're betting. Like you have to kind of be betting that Bitcoin or whichever one to outpace stocks, get our alternative investment, becomes that true viable currency around the world in a way that US dollars are not. You're kind of like, the bet is that this can become the world's reserve currency, that France will buy oil from Saudi Arabia paying Bitcoin instead of paying US dollars.
Yeah, and again, that's just to make this an even odds bet.
Yes, just to be the same place as stocks.
Right.
Yes, yeah. I don't think it's there. I'd rather invest in the companies that generate revenues, like just like the economic theory behind it's more stable. But again, I think that wasn't the point of the conversation today as much as like, but I could be wrong, and you could be wrong,
Right.
and we just don't know, and it's okay to take on some small amount of risk if the payout is that big. It's just, you have to understand any money you're putting into this asset, still don't want to call it an investment, this asset, you have to be willing to lose. Just like I tell my clients, if you're going to hold on to company stock, anything we leave in that company stock could be gone. So again, sometimes if we're saving enough into the 401k and they have enough in cash and they enjoy their work, then yeah, it's okay to hold on to that risk. Other times, like, no, I'm not going to stick around that long. I'd like to try and get out of here as soon as possible. I don't have to work that long. Okay, let's take that risk off the table. We're still investing in a diversified stock portfolio using ETFs and, depending on time frame and risk tolerance, incorporate some bonds. So we're not trying to go from stock to cash, We're just trying to go from single company stock to the S&P 500. And that's similar to the conversation with crypto. It's, okay, would we rather put the money in crypto or just increase our allocation to the S&P 500?
Right. I think that there's also another pretty big caveat to throw in with the analysis I mentioned. And that is, one big assumption is that's if you take the current market of crypto today and you grow that. But, the current holdings of crypto don't have to account for all that growth. We know, you can make more crypto.
Yeah. That's a great point.
It does grow on trees if you burn the trees and run your computer and mine.
That's a great point. So yeah, that's a way that we could be wrong.
Mm-hmm. Yeah, so it's definitely a speculative adventure. I think the bar is a bit high for it to be worthwhile, but it could be. It could be.
Yeah.
And from that standpoint, if a client wants to put a pie into speculative and a small portion of the pie into speculative investments and then a small portion of that into crypto specifically, I think that's sensible. And just kind of have a strategy to kind of pare that back if things go the other way, and just try to keep that in mind as time evolves.
So I have a slightly different take from that perspective. It's like, my perspective is, if you're still going to keep working and you're still going to keep saving, and you've taken care of all of those kind of prudent financial planning objectives, you have the cash reserve, then even if the value goes up, it is okay to still hold on to it because you haven't sacrificed your lifestyle at all. But whenever you want to turn some of crypto into lifestyle, we don't leave it in crypto. If you want to turn company stock into lifestyle, we don't leave it in company stock. But if you're happy to maintain your lifestyle and kind of acknowledge, I almost force clients to explicitly say something like, yes, I acknowledge this could go to zero. Like forcing them to just say those words out loud or something like that. It's like, okay, if you understand that explicitly, then it's okay to hold on to it because we've taken care of everything else already. Is that huge caveat. If we've taken care of everything else already, then it's okay if you enjoy it. If it improves your lifestyle by holding on to it or buying Bitcoin, then okay. But I'm not going to recommend it to anyone. Or at least I haven't been convinced. I am still reading what I can. I'm still open to being convinced, but I haven't been convinced yet.
Right.
This is a fun conversation. I like it. I'm actually really curious to hear from our listeners. Has anyone bought Bitcoin or any other cryptocurrency? And if so, why? Like, not necessarily how much your net worth or how this fits in, but I'm genuinely curious why you chose to buy cryptocurrency. And then maybe if you put some more thought into it, what would the alternative have been? If this money that you would have been spending on material goods and material purchases, I'm actually kind of in favor of that. But if this is money that you could have been investing in the S&P 500 or any other individual stock, I'm curious, why Bitcoin versus those alternatives?
Yeah, good questions, Aaron. And thanks for the conversation. And thanks, everybody, for listening. If you're enjoying these conversations, do spread the word. Thanks.
Bye.
Bye.
We appreciate you joining us today for this episode of the Mind Money Spectrum podcast. Be sure to visit mindmoneyspectrum.com to access the entire library of episodes. Remember, it's not black and white, but the wide spectrum of gray area where you get to pursue the freedoms you want in life. Opinions voiced in this material are for general information only and are not intended to provide specific advice or recommendations for any individual. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested in directly. Have a nice day.